Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, my last Cabot Weekly Review of the year. Tyler will be taking it next week. A little housekeeping. First and foremost, I hope for those who celebrate, you have a very, very Merry Christmas and a Happy New Year here as we head into the holidays. For next week, there is no top 10 issue if you're a Cabot Top 10 Trader subscriber, but I will be sending a full-fledged movers and shakers update on Tuesday when the market reopens, and everything else should be pretty much on schedule, okay? So into the market here, there's not much to say. You know, we've seen this post-Fed selling, and the most important thing to me is that the intermediate term uptrend, which had remained stubbornly in place, has kind of fallen by the wayside. Now, as I'll talk about in a minute here, I don't think the trend is really down as much as it is just kind of not up. But either way, that's kind of, what I'm looking for is an uptrend, not just a sideways or downtrend. And of course, that joins the longer term downtrend, unhealthy broad market. And really one of the things I've been keying off more and more, especially for me, but for the market as a whole in the last 4 or 5 months, is just growth stocks. Whether you're looking at NASDAQ or individual stocks being rejected at resistance, or growth funds, they continue to underperform, other areas of the market and just perform, pretty weak overall. Okay, so nothing's really changed. We're still defensive in Cabot Growth Investors model portfolio. We're about 3/4 in cash. We could go up a little bit. We could do a little selling and a little nibbling here or there, but for the most part, we're holding certainly more cash than stocks. Now, I will say it's not all bad news. I don't view this as it stands today. I'm recording this early Friday morning, December 23rd. As it stands right now, I don't view this as like where we were in May or June when everything was broken, basically, and it was like, hey, we just need 2 weeks up just to see where we're at. Like, forget buy signals, right? To repair the damage. I also don't view this yet like I do, early September when we had a solid, 6-7 week rally. Some things got moving, some things hit new highs, and then the Fed, dropped the hammer, and it was like, boom, a lot of things broke down. I'm not seeing that yet. I'm seeing more sloppy, don't get me wrong, I'm not whistling past a graveyard. I've seen things come down. They've gotten hit here the last couple of weeks, no doubt. But I haven't seen a lot of things, including the indexes, just really rip lower, breaking down to new lows, clear, breakdowns on the chart. I'm seeing a lot more down, but still kind of range bound and sloppy in here. Long story, what that all means, long story short, if the market, capital I, capital F, can kind of hold in here, maybe we have a Santa Claus rally, and if the market can hold in there in early January, which is always tricky as people reposition, but if we can kind of get a rally, I think there could be some things to work with. I don't view this as like everything's toast at this point, okay? But as we've been saying for months, and as it's served us well, you have to see it first to believe it. The onus is clearly on the bulls to step up. If the market just keeps going down, there's nothing to do. But I do think if we can find support, there should be some stuff we can work with. We'll see how it goes, okay? Let's hop into the charts. As always, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So here's the NASDAQ, and this is as of Thursday's close. Again, I'm recording this pre-market. We got a storm here, so hopefully I don't lose power. But you can kind of see the NASDAQ is the weakest of the major indexes, but even this is, and I'm not trying to make this sound strong because it's not. It's hovering near its lows, but even it is still kind of range bound. And this takes into account, I'll show you here in a second, it takes into account a lot of the, the Apples and the, Amazons of the world that are super weak. Even the unweighted like NASDAQ 100 is a lot stronger. I'll show you that in a second. But, clearly below this 50-day line, okay, which is kind of an intermediate term demarcation. And you flip through the other indexes, they're better, but it's kind of like, here's the SPY. Below the 50, again, you can kind of say, well, it's not negative. It's still, above these lows. It's still well above this recent low. So you can say maybe it's not negative, but it's not positive, okay? You look at the IWM, small cap stocks, same sort of thing, below the 50-day, negative, mid cap. It's just, I don't need to bore you with all this stuff every week, but it's good just to kind of review. So to me, the intermediate term trend, the uptrend is not in place. That's the way I look at it. Whether you can call it sideways, down, depends what you're looking at. You can come up with whatever name you want, but it's not up. And that's what we want to see. We're investing in uptrends trying to make money. We're not investing, to be smarter than everyone else. That said, like I said before, I do see more. I'm not trying to say, hey, it's above the lows from this bear market, therefore it's good. But I'm just saying I'm seeing a lot of stocks that kind of look like this chart where it's like, you had a bottom here, maybe you had a higher low here, you had a rally, And now it's backed off, but it's just kind of in the middle of this range. It's not something where everything is just either we had this huge rally and it really broke. We're just kind of in this sloppy phase. So I'm just saying if we can kind of find a little support in here, which we have a couple of times in recent days, if we can just kind of hold ourselves together, I still think things have a shot. But again, the onus is on the bulls. Just running through the evidence, I have a lot of stocks and just a lot of almost like bullet points to go through. Again, I every day at this point, I'm pretty much watching the XLP and the Dow and just kind of in relation to the NASDAQ and the stocks I'm watching and stuff like that. And we're still kind of dealing with this fact that this rally was led to this point, the rally that's failed, but I mean, the rally was led by the XLP and it was led by, say, the Dow Industrials, which are still above the 200-day line at the 50. You can see how far above the lows they are. Obviously, as a growth guy, I'm interested in how growth stocks are doing, clearly. But even for the market as a whole, usually, historically, you never say never, but usually, the more aggressive stocks tend to perk up, at or before a market bottom, just because it tells you, institutions are looking ahead to a new wave of economic growth and yada, yada, yada. So, it's not my favorite pattern. You can see relative strength line on the Dow, really spiked, but even here recently, it's been picking up steam a little bit. This is relative to the S&P 500. So not my favorite thing. I'm not saying I want the Dow to fall 5,000 points, but I'm just saying you'd like to see if the market can find support and bounce. You'd love to see the Dow kind of go sideways and the NASDAQ go up, that sort of thing. All right. Hurting the market here, and this is just one of these things. You do have a lot of, this is Apple. I don't follow the mega cap stocks too closely, but obviously they have a big impact on the indexes. And there's just been a lot of, it's not bad. I mean, but it's still down 27% from its high. But this one is threatening, you can see it's threatening its lows here near 130, lows of the year, I think. So, Apple's weighing on things. Amazon looks bad. Some of them have found support, like a Meta. Again, this isn't my cup of tea, but I know a lot of people own these things. Meta, some of these things look a little bit better, like NVIDIA. That's come off here, but still at the 50-day line and well up from the lows here a few weeks ago. So, but there's just a lot of things that are, weighing on those major indexes. The upshot of that is when you look at this is the QQQ, which is just the NASDAQ 100, okay? And you can see, here, lower low in October, and had been trying to do much, but never really threatened the 200-day line here. You can see, and now it's well below the thing, and almost, really lower than it was in the spring and threatening new lows. When you look at something like the QQQE, which is an ETF that's basically the NASDAQ 100, but Apple is the same weight as Facebook, is the same weight as whatever the 100th stock is. You can just see that those big cap stocks are clearly weighing down. We did hit a new low in October, but you can see it's much, I don't say much stronger, but in a better position here. So there is, I think, like I said, more stocks under the surface that are not looking good. I'm not saying they're buyable and the market's showing some massive, bullish clue, but I do think there's a lot of things that are, not toast. You know what I mean? They're trying to hang in there. And if the market can hang in there, they might have a shot. Two other things to key on before I get to stocks, just in the next short term. This is the chip index. Again, hit a new low here in October, rallied. Looked pretty good, tighten here, but this was the inflation report a couple weeks ago where people got excited, then the Fed killed everything the next day. So that was kind of a suck-in. We've obviously had this pullback. I think this will be key in the near term, especially with the NASDAQ and growth stocks. If chip stocks are just toast, I know Micron had a bad earnings report. That's going to be tough. But I do think if we can, find some support, bounce, just stabilize, that could go a long way for growth stocks and the NASDAQ as a whole. The other thing is just the financials, which, again, it's not really my bailiwick, but XLF looks okay. But I always, at this point of a tightening cycle, bear market, you're always on the lookout in case something comes loose in the system. And a couple weeks ago, even before the Fed, so Bank of America had some weird action here. I don't know, do they have exposure to Bitcoin or something? I have no idea about these big banks and what they own or not. I don't know if anybody does. But that looks kind of suspect. Blackstone is obviously a big private equity, investment bull market stock, new lows. So I'm just keeping an eye on some of these things, relatively, well-known big companies. Sometimes I remember Deutsche Bank years ago, that was kind of the company on the margin in terms of what was going on then. So just keep an eye on that. I think if financials and chips can stabilize, good. If if something really comes loose in the system, obviously bad. So just a couple of things, sort of tertiary indicators I'm looking at. Individual stocks, I'll just throw a lot at you. Like I said, bullet points. A lot of these I've mentioned before, but some other areas I haven't emphasized. So this is AXON, which is the old Taser. This is one of the few stocks that, yeah, it had a bear market, obviously, but it rallied, formed like a legitimate base here in the summer and the fall, and then, really went vertical. I mean, really exploded higher, broke out here, so to speak, kind of a multi-month breakout, I guess you'd call it, and really had a nice run higher. Obviously, the earnings gap was big. It got hit on a convertible offering, like I said, but so far, I mentioned last week, it's been hanging in there. Yesterday wasn't the best day, but still hanging in above this sort of earnings move, 50-day moving average, still on my watch list. It has a history of moving around. Even when it's in uptrends, you can kind of see it kind of goes up and comes down and all this stuff, corrections. So it's not it's a little bit, I wouldn't say it's the most institutionally sponsored stock, I guess is what I'm trying to say. But there's no question the stock seems to have changed character. And I mean, you can't argue with the relative strength here. If it wanted to die in the last couple weeks, or certainly all year, it easily could have. So it's still on my watch list. Shift 4, I really like this story. I think it's ready. It wants to go. I mean, you look at, here's Square, not to go on a tangent, but, Square, again, these old leaders that people know, Square or Block, whatever they call themselves. Here's Square, it looks like garbage. PayPal, garbage. I think it might have hit a new yearly low here recently. Even Toast, which is sort of a newer one, that's been trying to round out, but it's not really, it's hanging in here. I'm still keeping an eye on this one too. This is sort of a restaurant payment thing. Obviously got hit, came out way too expensive, so on and so forth. But, it's been hanging in there, watching it. But then, 4 really stands out, that, it's had this big support, and I've mentioned this before, and it just seems to be changing character. It kind of thrust here, and now here we go with the Fed killing the market. We're down, breaking the 50-day moving averages, and the stock is just, cool as a cucumber in here. Now, of course, the way the market is, maybe this thing tries to break out, that gets sold, sort of thing. So you can't get too bullish on it, but it's certainly a name that I'd be keeping an eye on. New name, great numbers, great estimates, growing sponsorship, good chart. There is some old overhead here, but certainly a name I'd be watching. Medical, I still like. Halozyme, I mean, I think it certainly wants to go higher, huge breakout. Kind of this, one of these lessons is when you get this sort of long, ugly decline, a lot of times it'll kind of form a more proper structure afterwards, even if it takes another 3 or 4 months. And that's what happened in Halozyme. It's broken out and it's holding. You wouldn't know that the market's getting hit on the Fed here. It's holding very well. BMRN, BMRN, if I can type that in. That looks great. It finally got going here. Not super dynamic. You can see on the weekly chart, got hit here, and it's really been dead as a doornail for months and months and months and years, really. But it finally got its act together. You can see the buying volume down here. Some good news from the FDA, I think. And again, just kind of a normal pullback. And Inspire Medical, INSP, this is a sleep apnea company. Great story. Always had a great story. Very rapid. I think it's 5 straight quarters of 70%, 70 to 77% sales growth. That's pretty good. No earnings, which is, a little bit of a yellow flag. But overall, obviously a big, long consolidation. And just seems, I like this sort of, angle of attack, so to speak. I would say odds favor the stock pulls back the market, it's into resistance, blah, blah, blah. But so far, kind of the longer these things hang in there, the better. We'll see what happens. Early January is always tricky. Things people reposition. You can get some wild moves, up, down, whatever. So we'll see. Some of these things maybe get hit, especially the smaller ones, a little bit thinner. Can get hit, bounce back, all that sort of thing. But certainly so far, so good. Still seeing, so some retail has come under pressure. I think there's more of the recession trade, so to speak, coming into play. Planet Fitness definitely seems like a nice, I think this could be another turnaround situation. Pandemic crash, actually got back to its old highs here. It looked like it was ready to go, but that was sort of bear market time. So the stock came down again. Again, I wouldn't say it's really, positive momentum as we call it. I mean, it's only been outperforming the market here for a couple of months, but certainly off to a good start here, kind of tightening up below 80. Go to the daily chart. Still a nice cookie cutter story, and if anything, kind of a lot of the dead wood in the industry got wiped out by the pandemic, unfortunately, which is probably going to help them. So the stock looks interesting here, maybe changing character. Let's see if it can continue to kind of consolidate, and then maybe sort of again one of these sort of not all-time breakouts, but multi-month breakout here in the weeks ahead. China, I know I'm warming up to it. It takes time because you know that the government can kind of pull the rug at any time, but I am intrigued by some of these turnarounds. Las Vegas Sands is one of my favorites, but there's a lot of names in the group in here. Big Bottom I've mentioned, and just again with this pullback, you've had some things that have stretched their legs here in the last couple months, and then you're just getting sort of so far tame pullback. Obviously, maybe next week or we come into January and something goes haywire and the stock's down 10%. But at this point, in terms of watching it, it certainly looks good. And again, like I said, there's a lot of names in the group. I'd say Pinduoduo, PDD is probably one of the better looking ones. This is more pure China online commerce, so it's kind of like the next, it's not Baidu, but it's like the next Alibaba. Think of it something like that. That's $122 billion market cap. But nice, relative strength here all over the place. But now, again, you're kind of looking for the changes in character. Nice breakout. Can it hold up? Can it hold up? The longer it can hold up, the better the odds, of course. Chip stocks, like I said, I'm just going to mention this Impinj, Pi, however you pronounce it, PI, holding the 10-week line. I have been seeing more stocks. Like I said, back in August, it was more. I mean, this one did okay, but when it had this sort of rally, and then it corrected, it sort of decisively broke. And that doesn't mean it didn't. It doesn't mean it was going to go down 50%, but it was kind of like clear. I mean, let me look at like Celsius, which is another name I like right now. But so Celsius had this run in the summer, and then you kind of get this decisive break here in mid-September, and now it has come back. But it did. It wasn't easy to hang on to. It kept going down. You had to sit through an earnings report, and if that didn't go well, who knows where it would be. So you kind of had more stocks that were kind of clearly saying, okay, we're not ready. I'm not seeing quite as much as that now. So far, I'm seeing more stocks kind of respect areas they should find support at. Not saying they look great, but 50-day lines, prior lows. We'll see how it goes. Very low volume, but anyway, PI is a name that I'm still watching. Good numbers. It's got a little customer concentration issue, but looks pretty good. Sort of on the more boring side of things, but looks good. This is MCore, kind of like construction. Non-residential construction, some of that is still strong. They kind of have these long lead times. It's not really affected by recessions as much, at least initially. But not your fastest mover. But I love this sort of long, sort of slow downtrend. Kind of sets up in here, so you kind of have this base, and then you have whatever weeks up in a row, 4 weeks of sort of a volume cluster here, and now you get this pullback in here. I think the volume was this was triple witching or quadruple witching, whatever the hell it was. So the volume's a little skewed, but just a nice orderly pullback to the 50-day line. That looks nice. Will Scott, I've mentioned this on and off here for the past few months. You can see it's just kind of easier on the weekly chart. Rally here, flat base, breaks out, pulls back, not making much progress. You can see the RP lines outperforming the market, not making a lot of progress because of the market, but clearly continues to act well, reporting good numbers. And now here we are down to the 50-day line. Let's see how it goes. Okay. DHI, DR Horton. Still think the home builders are interesting. We'll see how it goes. These are sort of things where they could go up and then the Fed says something, or rates turn around and not so much. So it's a little bit, not a commodity stock, but it's got a little bit of that flavor to it. But I'm just overall intrigued with the long period of no progress. Seems like it's changing character. Is all the bad news discounted sort of thing. Lennar, not quite as strong, but same sort of pattern. And there's other home builders too that look like that. And last but not least, that is Aerospace, which I do actually keep a distant eye on, because the group, when it trends, can actually move. It's not like a traditional growth group. I'm mentioning Boeing. This isn't something I'm interested in, but it is acting. You can kind of see like a little bit of a higher low here. Nice, rally, and actually been still trending higher here in recent weeks, even the last couple weeks with the market falling. And that's just sort of as a backdrop of, like, you have Transdigm, which is TDG. Now this is a $600 stock, which I know, some people hate, but just, just to look at the monthly chart. I mean, the stock can move. Okay. In fact, if anything, maybe it's moved too much, but it has taken now 2 or 3 years, whatever it is, off here on the weekly chart, right? Since the pandemic. Earnings came down, now they're coming back up. And this is kind of interesting where it's kind of now set up this cup with handle, if that's what you want to call it, but this nice structure. There has been some selling volume in here. So as always, you got to wait for the market to turn and all that. But, it's kind of interesting. It, came down here, rallied, came back down, but found support where it's supposed to, came up. And now again, instead of caving in with the market. It's sort of tightening up. So that's one to watch. And then Howmet Aerospace, this was in top 10 this week, the weekly chart. Again, these things aren't, I'm not saying this is going to break out and go to $80 tomorrow, but kind of, trying to go higher and higher, a little bit higher, obviously outperforming the market. People are looking ahead to kind of steady, reliable sales earnings growth. I think the 787 production is going to go up significantly next year, which is going to help all these sort of suppliers. So HWM is there, and there's some other names in the group. There's not a lot of names in the group. That's why I like it. Is when the business is good, it kind of all funnels to 10 companies. But so aerospace could be kind of a sneaky, I don't want to say growth play, but expansion play. But long story short, I mean, like I said, kind of at the end of the intro, is that one thing that served us well this year is like, you got to be aware, you got to have your watch list, but you got to, the onus is on the buyers to step up. The onus is on these stocks to break out. I'm not saying you need to see, 50 stocks break out and all run up 20% and then you missed them, but you got to see some things really shape up. And right now, this is the NASDAQ. Again, it's the worst index, but you got to see some support show up. If we're just going to melt down below 10,000, then there's nothing to do. It's just going to be a feeding frenzy on the bear side. Just stay mostly in cash. But if we can find some support, maybe we get a little, Santa Claus rally, and then, maybe we hang around for another month into earnings season. And then if we can just get some, strength here, maybe through the 200-day lines on some, growth-oriented indexes, not just the Dow, I do think there could be some stuff to work with. So pay attention, have your watch list ready while you're drinking your eggnog or having a couple whiskeys. Have everything in place. But, right now it's still a time for patience, which is still a virtue, okay? Again, have a great holiday week season. If I don't talk to you, we'll be back here. I'll be back doing the video in 2023. And I hope everyone has a great week, and I'll see you next year. Thank you.